We do have the Taiwanese index, which is up around 1.7%.
Index to focus on today is Nifty Financial Services. It's the Tuesday weekly options expiry on Nifty.
My sense is that Fed may continue rate hikes for some time.
The total aluminium production has jumped up by close to around 2%. The good part is the Jasukta facility out there, that's up by close to around 5%.
Nifty is opening 245 points higher.
A fair bit of interest rate highs that we've seen in the system, but concomitantly we've not really seen as much of inflation decline come along with it, especially as far as the developed markets are concerned.
This was our highest ever sale in a given month, so we are very happy with our performance. We have sold 47,100 tractors in the domestic market.
A muted second quarter update coming in for Marico itself. The India business posted a low single-digit volume growth. Remember, the previous quarter there was a negative growth.
If you look at the first 6 months of this fiscal, the industry has already grown more than 10% now. So even if you assume a flat industry in the balance of the year, you will still grow more than 5%.
Big relief is in trade deficit. After all, with the pressure on the rupee, you don't want to buy more dollars than you can earn. So that difference has fallen to 26.7 billion.
We have Nifty sitting with gains of 370 points.
Well, that was the day so far. Hello and welcome to a fresh new edition of Closing Bell. I'm Prashant Nair, and well, let me promise you, this is a bit of the old and a bit of the new Closing Bell. There is Anuj, of course, who's here. Anuj. I mean, I don't know, I feel weird introducing you to the show. But Anuj has hopped across from the next door studio from Awaaz. He's going to be with us with his invaluable insights. And our man in the... Rima is here, of course. Sorry, Rima.
Thank you for not forgetting me.
What do they say? Ghar ki murgi, right?
I think day one, at least, you'll give me some, pow.
And Nigel is out there in the newsroom. He's our man in the newsroom. And, through him, we hope to kind of live in the newsroom buzz, the energy which he will bring across to all of you. Nigel, hi.
Well, hi, Prashant. Don't miss me too much. In case you are, it's a holiday tomorrow. You can take me for a drink. What do you think about that?
Well, absolutely. I have a better plan, which we will discuss off air.
All right.
Right now, there's clearly a big party taking place in the markets, right? And going by Dow futures, which is up 1.3%, it looks like this party is going to go on in midnight and beyond.
I mean, looks like it. I mean, the point is this. If this has to depend on global cues looking absolutely rock solid, and I think it will, because you don't want a situation where the market here is partying and then, you come back in at night and, Wall Street sells off big time and in the morning you get punched in the face. You don't want that. So what I'm going to do is just put out a couple of points which does not talk to so much what's happening here, because it's very evident. Banks are doing well, IT is doing well, advanced decline is through the roof and it's looking pretty solid. I'm going to tell you that perhaps there is a chance that what we saw last night in the US, which is the S&P 500, there may be more to go. And why am I saying that? Very simple indicator. This is the breadth and momentum indicators. Breadth as measured by stocks over and under the 200-day moving average, and momentum as measured by the relative strength index over 70 and under 30. Both these are converging now on the S&P 500, which means that they are at an extreme, which is number of stocks below, under 30, with stocks RSI under 30, and with the stocks which are trading below the respective 200-day moving averages, also at an extreme. What has happened when this indicator has come through? This has happened 7 times since the year 2000. 6 out of these 7 times, you've had a situation where over the next 3 months, the S&P has rallied about 13%. There was one exception, right? And that exception was 2008, when after hitting this kind of an extreme degree, the market actually sold off more. It fell another 5% before things stabilized. I think we all agree this is not 2008. So can we just hope that things, the global does not throw us a nasty surprise. It stays well behaved and allows this market to do its own thing. So I think we're only looking for the global to not throw us a nasty surprise. Not very much help is needed, but you don't need to wake up to a 2-3% down days like what we had over the last couple of trading sessions. On the Nifty, just 2 things. One, the 23rd of September gap is almost filled. The level to watch is 17,291. And then after that, you basically come back to that old trend line from the all-time high, which comes in at about 17,670. That is still some time away. But with these kind of leaps that we are seeing, it's possible it comes sooner than earlier. Hopefully, at least that's the case.
Well, in terms of the possible handover that